Two key investments make up about 15% of our total assets, 10% allocated to Tesla and 5% to SpaceX. Watching everything unfold over the past few years, it's clear that Elon Musk has a deep understanding of cost management and efficiency. He recognizes areas of unnecessary government spending and how they can be streamlined. A significant problem in the industry is cost-plus contracts, a system where contractors are reimbursed for costs, plus an additional profit margin. This model incentivizes inefficiency because the longer a project takes and the more it costs, the greater the financial benefit for contractors. This is why many government projects spiral out of control in terms of costs and delays. A perfect example of this is the contracts awarded for transporting astronauts to and from the International Space Station. About a decade ago, Boeing was awarded a $4.3 billion contract, while SpaceX received just $2.1 billion. Today, SpaceX has successfully completed over 40 missions, whereas Boeing struggled for years, eventually completing just one trip, and even then, they had to be rescued. The contract that was originally set to cost $11 billion for Boeing has now ballooned to $88 billion, potentially reaching $98 billion. Meanwhile, SpaceX has repeatedly delivered results, operating under strict efficiency guidelines because they take on more of the risk themselves rather than relying on government funds. Another issue stalling progress is the excessive regulation surrounding spaceflight. Launches must happen regularly, and in an industry where rapid iteration and continuous deployment are necessary, requiring permits for every single launch is unsustainable. If airlines had to get approval for every takeoff, the entire industry would grind to a halt. Similarly, overregulation in spaceflight slows down advancements. Policies need to be adjusted to reflect the reality of modern space travel, allowing companies like SpaceX to move faster without unnecessary bureaucratic delays. Elon Musk and I share similar views on business and regulation. Over time, I've noticed a shift in the political landscape, with certain industries being heavily influenced by unions. The United Auto Workers Union has played a significant role in shaping policies that, in many ways, work against the free market. A notable example of this was the White House's EV summit a few years ago. Despite Tesla producing more than 300,000 electric cars that quarter, Musk was initially invited and then disinvited. Instead, the administration chose to highlight Mary Barra of General Motors, whose company had produced only 29 electric vehicles in the same period. The reason? The UAW had strong influence over the event, and they didn't want Musk involved. Tesla has successfully resisted unionization because its employees are shareholders. They have a vested interest in the company's success, and with over 5.8 million people applying for just 30,000 jobs last year at Tesla and SpaceX, it's clear that people want to work there. When employees are prospering, they don't feel the need to unionize. Tesla and SpaceX attract the best talent, creating an environment where workers are driven by innovation and long-term incentives, rather than union mandates. Some policies in today's business and political landscape don't align with this mindset. While inclusivity is important, success should be based on merit and hard work rather than enforced redistribution of wealth. I believe in creating opportunities for people to rise, but not in taking away from those who have worked tirelessly to build something meaningful. Regarding Musk's role in advising on policy changes, I don't think he's currently very active in the process. Initially, there was a plan for him to speak at the Barron Investment Conference, where we had even considered opening with a Saturday Night Lifestyle segment. Instead, he suggested we have a discussion about the future. However, at the last minute, he was unable to attend due to commitments at Mar-a-Lago. One thing that has always amazed me is Musk's ability to manage his time. People at SpaceX have told me that he never misses meetings. He travels constantly, working nonstop, and somehow manages to stay deeply involved in every aspect of his businesses. He recently joked that he's not a spring chicken anymore, but at 53 years old, he continues to operate at a pace that few can match. I first met Musk in 2010, but it took me 4 years before I became convinced to invest. When I finally did, between 2014 and 2016, we invested $400 million in Tesla. Musk asked me, "What took you so long?" That investment has since generated $6 billion in profit. We sold a quarter of our Tesla shares in 2021 after the stock had risen 20 times in value, not because we lost confidence, because it had become too large a portion of our portfolio. Tesla's stock has had its ups and downs. Over the past 3 years, it has been highly volatile, much like when we first invested. This is because the company is continually reinvesting its profits into expansion rather than maximizing short-term earnings. Many investors don't understand this strategy, but it's the reason Tesla continues to grow. At Baron Capital, we have consistently outperformed because we invest in businesses that prioritize long-term growth. In 1992, we managed $100 million in assets. By 2024, we had grown that to $45 billion, generating $49 billion in profits for our investors. We are now aiming to quadruple our assets over the next decade. Tesla today is worth around $1 trillion. Some people compare that to Bitcoin, which is valued at $1.7 trillion, and ask where I'd rather invest. I'd rather own 2 Teslas than 1 Bitcoin any day. Looking ahead, I believe Tesla could be worth $3 to $4 trillion, possibly even $5 trillion within the next 10 years based on its business roadmap. Musk himself believes Tesla could eventually be worth $30 trillion. The potential of Tesla's Optimus robot is particularly intriguing. During a visit to Tesla's Palo Alto facility, I saw firsthand the development of these humanoid robots. Musk believes Optimus could become Tesla's biggest business. He envisions a future where every household has a robot, and he sees this as a trillion-dollar industry. Musk has repeatedly proven that he can accomplish what others believe is impossible. Without him, the EV revolution wouldn't have happened, the space industry wouldn't have been transformed, and global satellite communications through Starlink wouldn't exist. His ability to drive innovation across multiple industries is unparalleled. SpaceX, where we have also been investing since 2017, is another incredible success story. Today, we hold about $1.7 billion in SpaceX shares, having invested $700 million. Similarly, we own about 4.5 million shares of Tesla, making us one of the largest investors in both companies. Initially, Musk's unorthodox methods made me uneasy. However, I realized that these unconventional approaches are precisely why he has been able to achieve so much. If he had operated within traditional frameworks, the breakthroughs in electric vehicles, space travel, and AI would never have happened. This was highlighted at a recent dinner where I sat next to Walter Isaacson, Musk's biographer. He described how, as a child, Musk would escape into encyclopedias, earning the nickname Encyclopedia from his mother. His photographic memory allows him to retain and process massive amounts of information, making him one of the most informed and capable individuals in the world. Musk is obsessed with cost reduction and efficiency, always looking for ways to remove unnecessary expenses while maintaining the highest standards. Unlike many executives who focus on short-term financial gains, his mission is to secure the long-term survival and prosperity of humanity. Tesla, for example, has grown exponentially. In 2014, when we invested, it was generating less than $3 billion in annual revenue. This year, it is projected to generate $27 billion. In just 2 more years, that number could reach $100 billion. Despite the stock's volatility, we have not sold our core holdings because we believe in Tesla's long-term trajectory. Looking at the bigger picture, Tesla is not just a car company. It is an AI, robotics, and energy company with limitless potential. The past 3 years have been a roller coaster, with self-inflicted wounds and market fluctuations, but the long-term outlook remains overwhelmingly positive. Tesla's continued investment in AI, automation, and energy solutions will shape the future, and I believe we are only at the beginning of its journey.